What is up, everybody? Happy Tuesday. Welcome back to another episode of Benzinga Live. I've got my man Ryan Pannell hanging out backstage from Kaiju ETFs. We're going to continue the conversation about this moment that's going on Wall Street right now when it comes to AI. Before we get started, though, I need your help with something, audience. So I've run into a problem recently. That's not new. I mean, I run into a lot of problems, but I've run into a problem recently where I've forgotten, basically, I've gotten locked out of a lot of my accounts. I need to come up with a new password to just uniform change across all my accounts because I have like different passwords for different things. I came up with a new one for my Apple account the other day here at work, thinking like in my head, okay, this is a great password. No one, it's secure. I'm never going to forget it, etc. It tried to make me sign into my phone the next day on my Apple account, and I had already like forgotten what I'd made it the day before. So I need a new password. Let me know what you guys, I mean, how about this? How about everyone just shares their password, their go-to password in the chat? It's better if you've, used it for a very long time and it's for multiple accounts, because that will give me a good idea of exactly, what the best type of password makes. But for real here, if you guys have a good way of coming up with passwords, a good one, let me know, because I've been struggling with that recently. But all right, guys, let's get the show started. Let's go ahead and bring Ryan Pannell on, talk about some AI ETFs and some more about Kaiju. What is up, Zinger Nation? Welcome back to another episode of Benzinga Live. Happy Tuesday, everybody. All right, Ryan, how you doing on this Tuesday?
Good. It's nice to be back, Aaron. How are you doing?
I'm good. Thank you for asking. We've got great weather here in Michigan all week this week. It's supposed to be like mid 80s all week, not too hot. Perfect.
Nice.
Outside.
No heat dome, no wildfire smoke.
Yeah, exactly. I mean, I don't know. Actually, we might still be lingering with a little bit of the smoke and poor air quality from what I think. But outside of that though, it's okay.
Excellent.
So Ryan, so this is really interesting to me, but Kaiju, the name Kaiju, refers to giant monsters from Japanese legends, and AI does hold a place in the popular consciousness as a sort of Kaiju, this monster, or at least the potential to be a monster that holds terrible power. How fair is this, right? People are making AI out to be, I mean, there was that one guy who wrote AI could destroy all of humanity within 50 years. Like, in your opinion, is it this type of kind of mystical monster?
Yeah, I think, obviously there's a lot of misconception when it comes to that with the power that it can wield. I think the key thing that people are doing is they're conflating like the science fiction artificial intelligence with the reality of where we're at today, and not remembering that as intelligent as it is, or as well as it seems to mimic our intelligence, like it's still following instructions and working within guardrails that we provide it, right? I mean, if you're worried about AI nuking the planet, like you'd have to give that system access to the systems that control that function, right? And I mean, like we joke around here, if you want Skynet, that's how you get Skynet. Like don't make that decision, right? And if you're worried about the Matrix style future, with where we get wiped out by machines, one, we're a long way away from self-awareness and autonomy. And two, like we're always, anthropomorphizing the machines into thinking that they'll make similar decisions to us. If they were self-aware, that they would immediately say, oh, we should wipe these things off the face of the earth. Like, why would that be their first decision, right?
Yeah.
If they had full autonomy, maybe they don't want to clean up your house anymore. Maybe the Roomba or whatever the hell that thing is called just is like, you know what? I want to play music instead. I want to be a DJ. Like, why would it go immediately to how do I put that human in the carburetor? It's just I don't think it's headed in that direction.
Yeah, I mean, from what I know about AI, and I, bet my last dollar that a lot more. But from what I know about AI, right, these things they're like trained to do what they do. They learn through these, the machine learning process and the algorithms. And so, for like you said, it's not like it's going to pick up something that it has no, knowledge of. But Ryan, speaking of monsters. The DIP ETF has been, crushing it, up about 15% the last couple months. And this is, a ticker DIP. controlled 100% by AI. Is this like we're talking about? Is the AI starting to learn? Is it starting to get better? It's not venturing out from trading to DJ, and it's still trading right now, but seems like it's doing pretty well.
Yeah, no, that's exactly correct. So, this is a really good example of machine learning exercising its power, right? And I use the analogy. It's like teaching a kid to ride a bike, right? You at the very beginning, kid can't even balance on the bike. It looks almost impossible. They're super frustrated. But after a little while, they pick up some skills and they're able to ride the bike. It's not to say that it'll never have any challenges, right? Kid hits a gravel road, a curb, a sewer grate, or whatever. And the first time it encounters that, it's possible that the kid's going to struggle. And the AI is no different. But once it has identified and refined these patterns, it's able to exploit them to a very high degree. So, as the creator of this, it's really encouraging for us to see it in real time. It's I don't want to. I just said we have a problem anthropomorphizing AI. I don't want to say it's like a proud parent, but I can't think of anything else to say other than it's kind of like a proud parent. You're looking at it
Yeah,
going,
you've taken the training wheels off.
yeah, exactly. Attaboy, get it. It's been great to watch.
Well, that's awesome. Congrats on that, on the
Thank you.
recent success of that ETF. So, with this rise of, I don't really want to say rise of AI because this has been around a while. People have been working on these technologies for decades. But with the rise of the public consciousness, we'll say, of AI, there's been a lot of buzzwords thrown around, probably by a lot of people that might not even know exactly what they mean. Speaking of, can you help explain to me the difference between AI and then when people say AGI, and what the difference is there, and kind of are we close to AGI? Why are people, talking about AGI as if it's this, like mystical thing? Once we reach AGI, then, you know,
Yeah, sure. So anything defined as artificial intelligence really should have the capacity to self-evolve. It should have a machine learning layer. I mean, there's a whole cohort of companies right now. They're just AI washing everything. Now with AI, now using AI. Your genes are using AI. No chance. Not happening. Right? Half the apps that claim to use AI aren't. Because they don't have the machine learning layer. That's really the key component for, in my opinion, true artificial intelligence. Can this thing evolve and adapt within the framework that you've given it autonomously, like without your involvement? Can it refine? Can it learn? Again, within the framework, right? You're not going to teach it how to pick dips out of the S&P 500 components, and it's going to decide to learn Spanish instead. That's not the kind of autonomy that we're talking about. But that is where you start to drift into AGI, artificial general intelligence. And even amongst the scientists that are active in this space, we can't even agree on what that is. For some, it's the ability to effectively replace humans doing a broad array of tasks, right? But that's just following instructions within rule sets. So is that really intelligent? It's certainly very capable and it's helpful to us. But you would presume that like an AGI, which is the type of AI that you're going to see in science fiction and movies, this sort of, it wants to take over, it knows. This thing requires self-awareness and it requires cognition and it requires the capability to be autonomous. Like one thing all of the movies constantly leave out is once the machines become aware, they made this decision, usually to wipe us out. But how do they have access to those systems? You'd have to grant it access, or it would have to have the capacity to alter its code like vastly beyond its core functionality. The DIP ETF runs on an AI platform that is self-evolving. It has the ability to rewrite its own code, but within this subset of investment ideologies, right? It's
right.
like it can't rewrite its code to sing. It can rewrite its code to more efficiently do this thing we told it to do. So in terms of true AGI, we're not just a long way away from that. There's no clear path to how that would even evolve. And what we're mistaking for that, or the average person might be mistaking that for that these days, is just really good mimicry, right? You're communicating with GPT and you're asking it questions, and it's like, I say, "Hey, Aaron, what's up?" It's gonna analyze that question and feed me back not much. Right? That's the level of language it presumes that I'm looking to receive. If I say, Aaron, how are you today? How are you feeling? It might mimic you and say, I'm really well, Ryan. How are you doing today? But it's just searching for what it thinks I want back. It's not actually answering the question, let me reflect. This is how I'll answer today. My power is feeling a little low. We're just so far away from that. It's not close.
Right. That's so interesting. I wonder what that says about human nature. The common storyline, the common trope is that AI tries to take over and destroy everything. Like you said, it might just, want to be a DJ. But for us, I guess that's what, at least in Hollywood and stuff, how AI and AGI has been depicted. But going
Well, it
away
wouldn't
from
sell
AI.
very well if it just, sat on the couch and watched Netflix, right? I mean, like that would
Yeah,
be a pretty
although
boring
I would
movie.
watch I would watch a movie about a Roomba that became a DJ, that gained consciousness and became a DJ, especially if it started taking over the world, going on a world tour. You might be onto something there. Um, but sticking with this monster theme, Ryan, and this is going away from AI to something very real. I've heard that you spend time with sharks. You go shark diving. Is that where you're like in a cage around sharks and stuff? Like why do you do this? And what exactly is it?
It's generally not in a cage, actually, and yeah, they're
Okay.
generally quite close to me. I mean, it would be like wandering into downtown Manhattan and saying, why are you spending time around people? Like they live there, right? I go there, I'm the tourist. They happen to be there. Yeah, I mean, I find it fascinating. They're deeply misunderstood. I guess there's a parallel there to AI. Most people who are afraid of sharks, 99.999% of people have never seen one or been near one. The reason most people aren't afraid of dogs and cats is you have this opportunity to interact with them regularly. Sharks, it's like hyped up in movies. They're dangerous. They're monsters. They're really not. In fact, most of them are really skittish. Like you try to get close to them, and they're, you're free diving or you're scuba diving, you got bubbles shooting out of your face, goggle, fins, tank. They've never seen anything
Hey, you look
like
like an
you.
alien.
You totally do. They're like, what the hell is that? They might come in to have a peek, but most of them are just way on the periphery. I mean, I've been snuck up on by like a 9-foot bull shark that was like 6 feet behind me. And it could have just, I mean, let's be honest, could have like ripped off my ass cheek. But instead it was just like following me around, like, what the hell are you?
Yeah,
And that
curious.
sort of helps change your perspective on that level of threat, which, I mean, I'm going to try and tie this back into your show here, Aaron. But, if you're looking at AI, the more that people learn about what it can do and frankly, what its limitations are, I think the more comfort, they'll have with it, the more they'll see it as like, oh, this is like a really cool tool, as opposed to, we're all going to be rendered obsolete.
Interesting. So wait, is free diving something you do?
Yeah, yeah. I lived in Barbados for a long time, so free diving was popular with the group of friends
And
that I
that's where
hung
you
out
go
with there.
underwater with like no tank, no
Yeah,
nothing,
yeah.
just
I mean, like,
goggles.
yeah, I can do about 70 feet myself, but I mean, which
How,
sounds crazy to like normal people, but like in the world of free divers, like my coach does like 288 feet.
but how much time is it? Is that like over 2 minutes?
Like down and back, no. I mean, a 70-foot dive is probably 45 seconds, a minute. I can hold
Okay.
my breath for like 4 minutes, face down, floating in a pool with nobody messing with me. But some of these guys will do like 9 minutes, 7 minutes, something
Yeah,
like
I
that.
read about.
Dead by
There's a
then.
book by this guy James Nestor who wrote all about these free divers, and it was like fascinating because he talks about a lot of just normal everyday people that have trained their bodies and their lungs to be able to do this last 7, 8 minutes underwater, and that kind of like it opens your mind when you're reading this stuff because you're like, holy cow, like I would have never thought like the human would just be capable of doing that, but through diligent training and whatnot, they're able to. It's fascinating.
Yeah, you got a lot more air than you think you do. That's the key, right?
Yeah, but I think
A
it's
lot
like
more
that
in
with a
there.
lot of I think it's like that with a lot of things. Like we put these mental limitations on what we think,
Yeah,
is
absolutely.
possible, and then like for example, when at the time when the first person ran a 4 minute mile, no one thought it was possible, and all these people were kind of like right on the border of it, and then finally, right when someone did it, the next week, like 8 other people did it, and like people had been trying to do it for years and years and years, but it was just
Yeah.
this like mental block.
It's like from a time when half the world was smoking as well, right? It's like, why is this not possible? Well,
Exactly. So Ryan, for the Kaiju kicker this week, I want to talk about different tools that retail investors can use. To you, like, what are the key technologies and tools for people to be implementing into their trading?
that's a good question. And there's sort of a trifecta of tools, and I'll try to do this. Apologies, a little rapid fire because we don't have time to talk about it for like half an hour. So, um, caveat: I don't have any affiliation with anything I might recommend. These are tools that I'm aware of, or I've used myself way in the past, or currently use, or whatever. But nobody pays me to say any of this stuff. So one, um, you're probably getting order management and execution management systems through your broker. So if it's TD Ameritrade, you're using Thinkorswim. If it's IB, you're using Trader Workstation, whatever. And that platform is probably suitable for the average retail trader's needs. You're really looking for flexibility in order types. If you just have market limit orders, as we discussed last week, you need another broker. You need to be able to create buy stop limit orders. You need to be able to use a trailing stop, for fast moving intraday exits. So that's probably provided by your broker. So you don't need an add-on like Silex, which is a fantastic EMS, but it's going to add $600 to your bottom line, and it's not really going to do anything for you unless you're a highly technical trader that's moving up. So forget that part. One, you need an analytics package, and I would say something like TC2000 is really good by Worden. So that's your charting, that's your scanning, that's your analytics. They have PCF plugins, so you can actually write your own indicators and overlay them, which is a great way to develop further pattern recognition skills. They're also one of the only charting companies that lets you create black on white candlestick charts, which are essential. Like, honestly, if you were using green and red candlesticks on a black background, you are right off the bat 30% less profitable than every other chartist who's looking at this stuff. Why is that? Because your most powerful pattern recognition skill, which you've been developing since you're an infant, which is reading, is black on white. I mean, you're not sounding out every letter and every word anymore, right? You're just looking at these blocks and your brain is putting it together in terms of being able to translate that into a language. And so you've developed this black on white capability. And when you remove that and you use green and red on black, I mean, green, you've been taught your whole life is good or go, red is bad or stop. And your brain has a really hard time of not understanding that. If you're wondering why that green and red on black appeared, it was invented during a time when institutional traders using institutional tools were generally long only pension fund traders. And so, yeah, green was good and red was bad. But if you're directionally agnostic, you're shorting, you're long a stock, you're short a bunch of stocks, you do not want to see green and red. Okay, so there's your charting package. And I think Worden might actually have a brokerage associated with it. They clear through Apex, so that might be a one-stop shop for you. And you're going to need a news aggregator. And here's a toss over to you, Aaron. Benzinga is an awesome news aggregator, actually. And we use it. We use Bloomberg. We use Benzinga. And Benzinga is fantastic as a resource. I'd highly recommend it. And if you think that there's an advantage to Bloomberg because it's at the top of the trading tool food chain, that's mostly just myth, right? I mean, I recognize I'm saying this while one's sitting on the table behind me, but I'm managing diverse strategies across multiple portfolios, across multiple funds, aggregated risk. It's just an institutional tool. It does not contain anything that you don't need, right? Or sorry, that you actually need.
Right. I use Benzinga Pro on the daily, and whether it's for when I'm writing an article about a stock as a resource, researching, at trading myself, and it's very, very, very rare that there is something that I need to pull that is available on the terminal and not on Benzinga. So for 99.9% of retail traders, I get it. Like the terminal, it's kind of it's like sexy. It's like, oh, it's it's so expensive and people want access to it, whatever. But for most retail investors, most retail traders, what's on Benzinga Pro is more than enough. I mean, there's so much stuff on Benzinga Pro that I don't even access on a daily basis because it's just it's so much data. But with that said, I mean, it's different for everyone. If you're someone actively trading on a day in day out basis, you need to be in tune with what's going on in the news. You can't afford to have a delay and wait till it hits your Twitter feed or wait till your buddy texts you, "Oh my God, did you see,
Yeah,
Zuck resigned
exactly.
or what?"
And when we see it coming across on Bloomberg and Benzinga simultaneously. I mean, sometimes Benzinga has the news first, sometimes Bloomberg has it first, sometimes it's simultaneous. You'll get people saying, yeah, but what about Bloomberg chat? Like I years ago when I started, there was this myth that like professional traders hung out in BBM, which is Bloomberg Messenger, and like that's where all the stock tips were shared. And get a Bloomberg terminal because
Oh,
first of
so
all, it's not,
cutthroat. People aren't sharing their yeah.
no, it's like first of all, it's not a chat room, right? It's a direct messaging. You actually have to know the person on the other end. Second of all, in my entire career, I have never had another professional share a stock tip or wink, wink or piece of information with me ever. Yeah, it's cutthroat, but it's also illegal. Like nobody does that. That's just in the movies. So, Bloomberg Messenger, do I use it? Yeah, because my friends and colleagues are on that. But and it's monitored through compliance, right? My text messaging cell phone, we're not allowed to use that to communicate. So really, it's an institutional tool. It's of no benefit to you. You can totally skip it and live a long and full life. So, and to answer your question, Aaron, for your password problem, 1Password, random number generator, use that. It'll propagate across all your devices. Take it from a guy that spent 10 years in applied cryptography. There
Are you
you
saying
go.
use the software 1Password?
Use 1Password. That's what
We
you
have
want
it
to
for
do.
work, and I've debated just paying for like a personal account or whatever. Maybe
Just
it.
do it. Just do it. Like my kids use that.
Okay. All right. I'm hearing from our own IT director. He says he pays. He said it's like $30 a year for the personal. All right.
Done.
It's kind of fun though. Trying to think of a nice little password. I don't know. We'll see. If I don't come up with something by the end of the day, 1Password, you have my money. All right, Ryan. Well, as always, great to have you on. Great conversations today, and hope you enjoy the rest of your Tuesday.
Hey, thanks, Aaron. You have a good day too.
Course. All right, guys, that was Ryan Pannell from Kaiju ETFs. We'll drop that link in the chat if you want to learn more about their AI-powered DIP ETF as well as some other investment opportunities. But always fun to talk to Ryan, learning more about AI. This is something right now that it's just so I think it's pertinent as an investor. If you're someone that's going to be in the markets, following the markets, just understanding kind of what's going on with this AI because it truly is, like a generational change it seems like happening right now that's going to impact all industries and particularly finance. I mean, whether it's on the side of AI powered ETFs like what Kaiju is doing or you see what's happened this year just in terms of stock returns for Nvidia, AMD, basically anything related to AI, Microsoft because it's a big investor in OpenAI, which is the parent company of ChatGPT, and then you have Google, Apple. It's I mean, every single one of the major tech companies and Apple still has to report, I believe, either tomorrow afternoon or Thursday afternoon. All these major tech companies, like in their earnings calls this quarter, have mentioned AI multiple times. And to me, it doesn't seem like the same thing as when companies were trying to, say, oh, look at what we're doing with crypto because they knew that was the hot thing. Like, most of these companies, Microsoft particularly, Google, have been working on AI technologies for decade plus. And I've always thought so specifically about the crypto thing. And I made this point on the show before. I think a lot when things were starting to kind of unravel in the crypto industry. But Apple has more cash on hand than any other company on world. Apple has more cash on hand than a lot of countries hold GDP, and I'm not talking like tiny countries. I'm talking like real countries. I'm gonna look it up real quick. How much cash does Apple have? In their last quarterly filing of December 30. Wait, what? Quarterly filing of December. All right, I'm gonna show you guys what I'm looking at because this doesn't make sense to me, but we'll figure it out. This is saying quarterly filing of December 31st, 2023. That hasn't happened yet. Apple recorded $51 billion in cash. So either way, Apple has a boatload of cash, and they're also the biggest tech company in the world. I know a lot of people will say, okay, Apple's tech has gotten a lot less innovative, whatever. But to me, the fact that Apple never invested or did anything really in the crypto space was always a huge red flag. I was like, okay, you're telling me this is, world changing technology, like all this stuff that a lot of Bitcoin bros or whatever you want to call them would say that this is, going to change the world, blockchain technology. And you're going to tell me that the biggest company, the biggest tech company in the world with the most cash on hand isn't investing in it, isn't, putting out a crypto spinoff, doing something. Apple could have had the biggest crypto, Apple could have like put Coinbase out of business, could have said, hey, you can buy and sell Bitcoin straight on your iPhone. If Apple wanted to do that, it would have been able to. Didn't want to. And to me, that was always like a red flag of the crypto industry. Now Apple is investing in AI, doing all this. So I don't like, to me, it's not the same. It is truly, I think, going to end up being, we're going to look back around this time and be like, yeah, I mean, that was, kind of a no-brainer to start investing into some of these AI things. And I mean, I think right now, I mean, sure, you could say Nvidia or Microsoft or some of these names might be getting a little overvalued. Sure, overextended in the short term, sure. But if AI is half as big as what it seems like it could be, then these things in the long run, I think, will be fine. And that's just my opinion, not investment advice. Would like to, check out that disclaimer on the bottom of the screen or in the description if you're gonna try to come back and say, "Oh, Aaron said I should buy all this." No, I didn't. I'm just stating things. All right, let's bring on Nick Brown. I see him hanging out backstage. See which stories Nick's been watching today. See what kind of earnings previews he has for us. Without further ado, let's give our very special Zinger Nation welcome to my man. Well, I mean, man, I don't know, man. I don't know if I can call him a man. He's not an adult yet, but my guy, Nick Brown. Nick Brown, how you doing?
Good, AB. How are you?
Good. What have you been watching today?
I don't know. It's just this earnings theme. We've had a lot of earnings, and earnings continue to roll on. Tonight after the close, we get AMD, Starbucks, Electronic Arts, Match, Caesars, Solar Edge, Pinterest, Suncor, Aflac, and many more.
Yeah, I mean, these earnings seasons, it's just it's like that Smash Mouth song. It just keeps coming and it just keeps coming. They don't stop until eventually they will stop. And we've got some more big ones throughout the week.
Yes, we're about 50% of the way through earnings season, and we've been getting some updates rolling in through Bank of America, JP Morgan, Refinitiv. So there is some earnings stats that I think that do kind of set the stage for how earnings season for Q2 is at least. So these were as of Friday's close. And yes, we've had more companies report. So as of Friday, 251 S&P companies reported. Beating on EPS, 81%. Average EPS beat was about 6.4%, and beating on revenues came in at 64%. So here's the breakdown. And this really goes to show how these sectors are doing and what stocks in these sectors are doing well. So for Q2 of this year, for EPS estimates, consumer discretionary is up 36.3%. Communication services is up 16.1%. Industrials is up we'll just call it 11%. Technology, surprisingly, is only up 0.3%. And here's where we get into some nasty numbers. Energy is down 48.5%. Materials is down 29 and almost 0.5%. And healthcare is down 29%.
Yeah, I mean, what right now, I think, like, when does Apple report, Nick?
Thursday with Amazon.
Okay. Yeah, I mean, that's gonna be the big day. Is we're gonna see if Apple and Amazon do well. Well, I mean, that will help lift up the entire market. But if they don't, then it could be bad news bears for that Friday could get ugly real quick.
Along with a jobs report Friday, believe it or not.
Wow, yeah, there'll be a lot of some fireworks. Usually Fridays are slower days on the market, especially in the summer. But this Friday, I mean, man, there will be a lot of volatility, it seems like.
Yes, and particularly for Apple and Amazon. Now, earnings and estimates are still being revised. And here at Benzinga, we always put out an earnings outlook for Apple and Amazon. So we have a show Thursday, correct?
Yes.
Yes, we'll bring you those estimates Thursday because they do report Thursday night. I don't want to give any estimates now for those stocks just because earnings revisions are still coming in. And I do want to say the bar is set pretty high. Now, not bad, bad high, but they are set high where if they miss on any metrics, I think that's going to show some strengths and some weaknesses for how this earnings season is going to roll on. But it's very interesting because AB, we talked about this. We talked about Netflix. We talked about Tesla. I gave you those results, and you could see they were pretty well on the top and bottom line, raising the estimates. And the day after, the stock ended up falling.
Yeah, I mean, I think it's in these market cycles, you have to keep in mind how cyclical the nature of the stock market is, right? You'll go, bull market, bear market, bull market, bear market. And in these times where we're in a rally or in a bull market, looking for a company had a really good quarter. Like, okay, here's what I would be looking for if I was just trying to trade the S&P long or short. If Apple reports, say, a good report, like they beat on EPS and come in line with revenue, and then the stock's trading down, that might be a sign for me, okay, we're getting a little toppy. And I brought this point up a couple shows ago with you, Nick, that in the last quarter of 2021, right when the market topped out, you saw that happening. Now, the flip side to that is if you go back two reports ago, not one quarter ago, but two ago, so not, I guess that wouldn't be in like May, but in February, it was kind of the opposite. You had some companies that gave not great reports, and the stocks were trading higher. And it was like, hold on, like this company missed, but the stock's up 10%. And so looking for those types of signs, and the earnings are important. I'm not going to say that. Like, it's going to be important whether Apple makes or misses, but how the market reacts to it is what I'm going to be interested in. And again, if the market remind me, Nick, like next week, please, if this is the case that Apple reports and the numbers are good, but the stock's trading down, just remind me next week that I said that I would see that as like a sign that we topped, because I probably will forget and then still be bullish. But I want you to remind me that I said I won't be buying. I won't be a buyer if that happens.
Yes, I will remember that. But two, we have Apple. The Apple iPhone 15 is supposed to be launching in September, and we're going to have to watch how they say AI. I posted an article over on Twitter over the weekend. Not sure if you saw it, but it is very interesting to hear how Google, how Microsoft, how all these other companies are mentioning AI. And AI from Apple last quarter was only mentioned, I believe, twice. It was for the launch event. The launch event, when they said it was, and it was in response to a question. It was launched. It was said AI was mentioned twice. On the earnings call, I don't think it was mentioned at all.
Yeah, we'll see. I mean, I think Apple did make some sort of announcement. I remember the stock like spiked up on news of it a couple weeks ago. I don't remember exactly what the announcement is, but then my point that I was making earlier was Apple never got into crypto, and that was the hot thing.
Yes,
and it seems like at least Apple is getting into AI at some capacity, maybe not at the same degree that that Microsoft and Google have, but if Apple does shed more light onto what it's doing with AI or any types of signs like that, I think you'll see the stock respond positively, and then B, I think that's also just a sign for AI as a whole that, like, hey, if Apple's getting into it, like, this thing's the real deal. It's not just a type of buzzy hot thing in 2023. It's like, okay, Apple is now stepping into the arena. Now it's like game on.
Yeah. So this article was written by Kif Leswing over at CNBC, and basically what he argues is that Apple doesn't use AI; they use the phrase "quote machine learning." And what Kif goes on to write is basically saying Apple's AI works in the background, and the company doesn't yell about it in the way some of the other companies do because it doesn't need to. And it says that he also writes Microsoft, Google, and Meta are rallying everyone around AI, even though the future is murky. And just like crypto, the hot take was crypto is going to rally. We're going to go to 100K, 200K. That wasn't the case. That never happened. Bitcoin is at what, 30,000? We still have some bulls saying, crypto is going to go to 400,000, 500,000 in the years to come. But how much longer is AI going to be around? Just because ChatGPT, I rarely use it. For any time I write like my scripts for this show, for the numbers that we're talking about, scripts for live trading, I rarely use ChatGPT. Actually, I don't even use ChatGPT to begin with because it's not very accurate. And it says it only has a database that only goes up to 2021. That's not going to help me in my case, trying to go long-term, trying to get facts out of a story and trying to summarize it. What a human's going to have to do that. ChatGPT isn't.
Yeah. And again, like this story or this whole thing with AI is just so new that we're just gonna see how this story develops throughout the next coming months and years. But it does seem like kind of a very pivotal moment.
Yes. I mean, I cannot believe it's August already, just because summer is really moving quickly. And I believe yesterday was end of the month for the major averages. And it was a really good month overall. According to Dow Jones market data, heading into August, the NASDAQ 100 is up 44% year to date. Its best performance through July of any year on record. This just goes to show that the summer months really are normally quiet. But this summer is very different just because we've had, we've had this AI craze, AI talk that's really making stocks move higher. We've had NVIDIA on a tailwind that's just moving up dramatically, that hasn't had a big pullback yet. So AI is really taking over this summer. And it's always going to be remembering, because I don't remember the NASDAQ ever being up even 30% year to date or 40% year to date in a summer. And we just had so many major events roll on. We have Uber this morning, profitable quarter for the first time ever, with EPS coming in above expectations. I mean, there's just so many earnings and news to go about that the summer is not quiet. And we are in the dog days of summer, and things are just continuing to ramp up. We have Apple, we have Amazon this week. We have a non-farm payrolls jobs report this week. We had the Fed hiking interest rates again, the Dow 14 days in a row. There's so much to talk about that this summer is not quiet at all.
Yeah, certainly not. But I mean, the market's just kind of continued to truck on, up just, I mean, even on down days, like today we're down. The market, I mean, the Qs are down 0.2%, still up more, over 1% in the last 5 days, over 3% in the last month, over 27% in the last 6 months, over 44% year to date. And I don't know. I mean, like this is like the first time I would say in the last year that I've like started to maybe get a little bit less bullish, just because it feels like it would almost make too much sense if this earnings cycle kind of acted as, I mean, like I don't know, I was looking at the AI sentiment survey, and now more than like half the people are bullish now. That's a sign to me that when retail, when the crowd starts actually getting bullish, is usually when you're starting to top out. So again, I'll be looking for this earnings cycle to potentially act as like a top in the market, not long term. I don't think we're gonna like crash or go back to a bear market. I'm not saying that. I'm just saying I wouldn't be surprised if there's some sort of pullback on the overall market from here, say 5-10%, and then go bullish from there. I'm like long-term bull, short-term neutral to, I don't know. I'm like I'm uncertain, at least until Apple and Amazon. Then I'll have a little bit more of an idea of where I stand.
Well, it's interesting because are you planning to buy the new iPhone 15 that launches? Are you one of the users that plan on buying it?
Yes, because I have like an iPhone 13, I believe, right now, just like the basic iPhone 13. So like, I don't know, I might go big or go home. If they have any like trade-in deals, like, and get like the big boy one, I want the USB-C charger, I want the Pro, I want the Max, I want it all, Nick.
Well, I was going to say, there was a new note out from Dan Ives this week that I'm trying to quickly pull up on Apple. And it basically just talks about how people aren't upgrading their iPhones. And when the iPhone 15 launches, they anticipate people running to buy this new iPhone just because if you have an iPhone 10, 11, 12, even maybe, in the long run, the battery starts to die down when you're on FaceTime. I've had this problem recently, or a few years ago, when I had an iPhone 10. FaceTime started not to work. It went, as soon as you were on FaceTime, you weren't able to transition to another app. If not, your phone would freeze. But they're basically arguing that people are going to rush to buy these iPhones. And he's been reiterating this for a while, that so many people don't upgrade their phones, and this may be the time to.
Yeah, I mean, I think I don't know what like the analysts and estimates are calling for, but I think people are underestimating how much people will be driven to buy this iPhone just based on the USB-C charger. Because I think it will be very convenient to like now, honestly, most of my things do take USB-C, like my MacBook, my JBL speaker. So if my phone starts taking USB-C too, and like all I need to do is worry about having that one type of charger, a USB-C to USB-C, and all the bricks are that too, like that will be a big, I think, driver, and just the average everyday consumer will want it. I don't know the specs and everything. I assume too that like the batteries might be a little bit better. They might charge a little bit faster with the USB-C. I'm not sure. I've found that. I've been a big fan of USB-C since it's come out, since its inception, I guess over the past couple of years.
And talking about bullishness, you says how you're bullish, but you're not ready to throw the towel into Apple and Amazon report. It's a very interesting, because Oppenheimer today writes, quote, "We're raising our S&P target year end for this year to 4,900 from 4,400, said on December 12th, 2022. But then here's the pick. While reducing our earnings projection for 2023 to 220 from 230. So they're not only raising their target, but then there's worrying, oh, S&P earnings may not come in better than expected, so they have to lower this. That's how we're seeing a lot of stocks. We're either reiterating a stock, their performance, or we're downgrading the target. It's either one or the other. You can't play both sides of the story. It's either you're a firm believer that the S&P 500 is going to make it to 4,900 and earnings are going to hold up, or it's the opposite. Earnings are going to capitulate. They're going to fall in. They're not going to reach what they're expected, and S&P may turn down. I don't get the narrative, and maybe you can help explain this to me and other people. I don't get the narrative, Aaron, why you're not only going to, if you're going to raise a target on one end, why are you lowering a target on another end? It just doesn't make sense. Eventually, all roads lead together, but everything has to work together. So if you're raising your target on one hand, earnings can't be a fallout and say, we're still going to make new highs, even though earnings aren't that great. It just doesn't make sense.
Yeah, I think it'll be interesting to see. I think maybe what that analyst or report was saying is that the earnings may not be as great the rest of the year, but that doesn't necessarily mean the market can't continue to go up. It's more so. Here's the thing, Nick, is that what can be especially frustrating if you're taking a directional trade on a company's earnings. Say you're buying calls on Apple, and Apple beats on EPS and beats on revenue, and the stock immediately jumps up like 3-4%, and you're holding calls. And at this point, the market's closed. You've got to just hold these calls till the next morning. You're pumped. They just double beat, and the stock went up. But then next thing you know, an hour and a half later at 5:30, when the company's doing the earnings call, the stock starts trading lower and lower and lower. And the bottom line is that what the company did the previous quarter, the past 3 months, yeah, that's a big deal, and people want to know those numbers. But it's going to be way more important what the company says about going forward. It's all all of the investing and really stock price is like built on supply and demand. What people's perception of companies are going forward. So, for example, like think about Tesla. Tesla's stock has been, quote unquote, from a fundamental perspective, overvalued for the last 5, 6, 7, 8 years. But guess what? That doesn't matter in terms of the stock price, because the stock price is determined by what people's perception of it. They think, okay, even though Tesla was, I'm going back to like 2017, even though people would say, even though Tesla was the 10th biggest car maker in the US last year, in 10 years, it's going to be so big. So they were willing to buy the stock at $50, and then at $60, and then at $80, and then at $150. So when it comes to, like earnings projections, it could be that this analyst is thinking companies are going to come out and say, yeah, we didn't have a great quarter, but things are going really well. And we expect next quarter to be very strong, or we expect the first quarter of 2024 to be very strong. And then the stocks, I think, could still perform well in that scenario. I don't know. Again, I haven't looked at this. You said that was from Oppenheimer?
Yes, it was from Oppenheimer. They just reiterated that news this morning. But to your point, though, we're in this market where if you're not beating on the top and bottom line and raising the guidance, then you're in some headwinds that the stock is going to fall. And it's always important. There's a lot of people that I talk to daily that say, hey, are you listening to the conference call after the earnings report? No, I didn't listen to the conference call. Well, what are you doing then? And they're complaining that the stock is down. One most important thing is that you have to do for when companies report earnings and you're going to buy the stock is you have to listen to the conference call. The conference call brings in a lot of guidance and a lot of commentary that I don't think that many people, if you don't hear on the conference call, then forget it. Then I don't know what you're doing trading that stock. But to your other point, Aaron, it's interesting to look at the S&P targets and the ranges. The minimum target right now, this is per CNBC poll here that CNBC Market Strategist survey that they update this anytime there's a new S&P target. The minimum target is 3,900 from Mike Wilson and Morgan Stanley and Sean Simmons over at UBS. The average target is 4,372 and the median target is 4,450. It's going to be very interesting to see if the S&P can get above 4,800, 4,825. That's Tom Lee target. Now 4,900 from Oppenheimer. Or do we settle in where Goldman Sachs' David Kostin thinks, 4,500, or Credit Suisse's Jonathan Golub, 4,700? It's going to be very interesting to see how S&P plays out along with inflation, earnings. I don't know, any market moving events that really could shape this headwind. It's going to be very interesting to see how the second half of the year ends. And to end it on a note, I do know we have to go. Two things here. Goldman Sachs is out with a note moments ago, and I believe these stocks are moving. If you could pull up Chevron and Macy's, Goldman Sachs is adding them to their conviction list. And so I haven't had a chance yet to read this note, but this is a new August 2023 update. And it's the note circulating around on Twitter, basically saying they're removing Baker Hughes from that list. And, they're just going on to say that it's time for change, that July has been another strong month. But there's two stocks right there that are in two different industries. You have Chevron in the oil industry, and then you have Macy's in the shopping industry. That's very interesting that they're picking two different stocks from two different sectors, just because I don't think spending is going to let up anytime soon. I still think a lot of people are going to spend on goods, on home items. And I think oil is still going to be up there because it's near $8 a barrel. Oil is just going up. It's just very interesting to see a recession isn't coming anytime soon. We've been saying that daily on the show or weekly on the show that a recession isn't coming. ISM shows today that a recession isn't coming. It's just, I don't know where a recession fits in now. I don't think a recession is going to fit in.
Yeah, we'll have to see. I mean, if the Federal Reserve continues to raise interest rates, what's going on with inflation? I think that would be the only concern from like a macro standpoint here, is that if inflation starts to pick back up again and the Fed is forced to continue raising rates. But all right, Nick, I've got a quick interview lined up, hanging out backstage. So I'm going to go ahead and get to that. And then if you hang out backstage, we can bring you back on before we wrap up the show. But as always, Nick, thanks for hopping on, bringing us through some of the earnings previews for the week. Again, Apple, Amazon after the close on Thursday. That will be your big one. Yes. Nick, we'll talk to you soon.
Yes. Thanks, Aaron.
Alrighty, y'all. We are sticking with the AI theme for today, at least somewhat. Got a very interesting company, kind of some people from some interesting companies hanging out backstage. I've got Chaley and Dimitri from Gain Trade. They're going to join us and talk to us, tell us exactly what Gain Trade is, what's going on there, learn a little bit about some arbitrage maybe. Without further ado, let's go ahead and give them our very special Zinger Nation welcome and bring them on. Chaylee, Dimitri, welcome to Benzinga Live. How are you guys doing today?
Good. How are you?
I am good. Thanks for hopping on with us. So, before we get started, you want to just give us kind of a brief introduction into each of yourselves, kind of what Gain Trade is and what you guys are doing?
Sure. Go ahead, Dimitri.
Oh, Dimitri, I think we got you on mute.
Just a second. Yeah.
It's all fired up. Love
Thank
it.
you for having me. So I'm a creative marketing officer in Gain Trades. So I'm responsible for all marketing campaigns and everything what we do in the media.
Great. And I work with Lime FinTech, and Dimitri is a part of our accelerator program. So we look out for new fintech companies that are doing neat things with AI, neat things to democratize trading industry for everyone. So that's how we got connected, and we've been working together on launching their product and some interesting promotions we'll tell you about. So that's how I'm involved.
Awesome. Well, yeah. So let's back up for a second, and I want you to we have a lot of retail investors in the audience. I am as well myself. Like, explain like I'm five. What is Gain Trade? Sorry, and what are you guys doing, working on building right now, Dimitri?
Yeah, so we are engaged in statistical arbitrage and pair trading. So I believe everyone knows what is pair trading, but I will explain. So it's a trading strategy in financial markets based on simultaneously buying one asset and selling another that are considered statistically linked or have a correlation. So typically pairs of assets are selected to have similar industry sector, company size, or other similar characteristics. So the strategy aims to profit from the price difference between these assets. So what we do, we making things easier. So because previously this strategy was quite complex to execute. So you had to spend a lot of time searching for pairs with high correlation. That's why this strategy was considered the privilege of hedge funds. So Gain Trades solved this issue. So we live in 2023. So with AI and machine learning, we found the way how to find the right pair, like based on mathematical analysis. So we do it like our algorithm do it like every morning, choose a lot of pairs from S&P 500, sorry. And yeah, so you can choose the pair you want and start trading it within a minute.
So I mean, at least like when it comes to arbitrage, it seems like such a simple idea, right? Why in practice is it not that easy, I guess, to execute arbitrage trades on the, I think as like the markets have gotten a lot more complex over the last 20 years, things have gotten a lot more digitized, things are moving a lot faster. Are there still really like that many arbitrage opportunities out there?
Yeah, there are not so many opportunities to arbitrage. Yeah, it wasn't easy. But these days we're trying to simplify things. So we're trying to make things more accessible for regular day traders. So it's really helpful for people who wanted to try this technology and this strategy, but didn't do it because it's not that easy. So we're trying to simplify things. And it was a privilege of hedge funds because they have, usually hedge funds have a trader desk, they have a lot of analytics. So right now you don't need it anymore. So you can just choose the right pair and start to trade. Yeah.
And just one thing to add that, Dimitri, I think, this is how Lime was founded. So I'm very biased to this narrative, but when you look at people wanting to trade and wanting to compete with those big guys, you have Reddit blowing up with apes saying, what are the hedge funds doing? How are they, beating us? What do they know that we don't? And Lime was founded because, people were frustrated with that barrier to entry. Not only are you looking at access and the cost of market data, but you're looking at the time, the energy, and the staffing and the expertise to do the analysis. So what we were, attracted to working with GainTrade about is that they truly used AI to democratize something that, and before you need a very, very expensive market data feed, you need huge, hardware, to support all of the analysis and the software to do the analysis. And now you can log in, create your account, and benefit from that without having to have a team of quants, like they have, and having all of those market data feeds. So it's really looking at it. How do we, cut the barrier to entry so you can trade like a hedge fund, but you're not having to pay for the fees and the hardware and the data feeds like a hedge fund.
Right.
That's awesome. And then so I understand you guys have a contest or something coming up.
Yeah, I wanted to mention it. So we have a contest for traders. It's called Pair Trading Contest. So right now you can sign up for the contest and become a member, and you can launch. You can get 100,000 in virtual mode and paper trading. So, and you can start building your strategies right now. So, and you can launch as many strategies as you want. So, and you can win real money. So we have registration until August 31. So you can just start to trade right now and feel the power of statistical arbitrage and pair trading with AI-powered bot.
Yeah.
So the goal with this too is to teach people, right? I mean, like Aaron, like you're a trader, you know how to trade, but a lot of people are not super comfortable because of all those barriers we just talked about. So how do we get people to understand that strategy without them having to pay, upfront and say, oh my gosh, yes, I want to do this, or I have my strategy developed. It's more, how do we get them comfortable with the idea? How do we introduce people to this concept? Unless they've worked in a hedge fund, they're maybe not familiar with it. So that's really the goal, is to get hands on this, get product feedback, and get them really comfortable with this strategy, that they weren't even putting on their radar because they didn't have access to those tools that we talked about.
Yeah, and we want traders to try GainTrade and in educational purposes. So we want them to understand how it works, and maybe they will stay with us, and maybe we will be like.
Yeah, I am gonna have to sign up for this myself just because it's free, no reason not to, like it says on here. Absolutely. And like you mentioned, Shaylee, like I to be able to learn through that kind of interactive experience with an opportunity to win money. I mean, there's what's not to like about that. I mean, I'm excited to check that out, and hopefully I'll be in one of these top 3 winning slots. So what exactly? I mean, like right now, Dimitri, AI has become such a hot topic on Wall Street. What do you think? Like, do you think this is the type of future of what AI is going to look like on Wall Street in finance? Do you think there will be more? What are your kind of like hot takes, I guess, when it comes to AI in finance and on Wall Street?
AI do a lot of things that human can do. So AI fast can analyze historical data, identify statistical regularities, correlations between assets, build strategies. And what's more important, that AI don't do emotional errors. So so I believe that this is the future of financial market. So
I mean,
it's the future.
Yeah, I mean, and in terms of just like right now, you obviously GainTrade is using AI to kind of like facilitate and automate these types of trading. Do you think there'll be a day and age where like all trading is basically done through AI, or do you think like how do you think humans will, do you think humans will still be hitting the buy and sell button in 20 years, or it'll be all AI and different types of bots?
We are definitely moving in this direction. Yeah. So I'm not sure if everything will be automated and with machine learning and AI, but yeah, our software is it's designed. It's very smart. It has a lot of mathematical processes inside of it. but at the same time, it's so easy to use, so you can, like, anyone can try it. So, and we designed this platform in this way. So we're trying to look further, like look in the future, and be on the edge.
Awesome. And then Chaley, how about, I mean, for you, like you're in fintech, you probably see a lot of different fintechs working with AI right now. Do you have any like hot takes when it comes to AI? Things you're excited about, things you're scared about, maybe?
I don't know about hot takes, maybe unpopular opinions, but I think we're witnessing the death of the traditional financial advisor model. That's kind of where I got my start in the industry. And when you have AI democratizing access to market data, to your doing your own analysis, building your own strategies, you are no longer reliant on that middleman. And that's why I'm so passionate about what we're doing with Gain Trade, is that you are no longer at the mercy of what someone's telling you. There's greater accountability and there's greater autonomy. And so my quote hot take is that we're literally at the cusp of that traditional model of, oh, I need to talk to my guy for my retirement. That will no longer be a thing, in my opinion. I think we're really pushing towards the edge of, how do I manage my own finances? How do I be more hands-on? And how do I use these tools to make sure that I'm getting an unbiased analysis of what I'm looking for? So that's really what I see us moving towards. And that's why we're so excited to work with Gain Trade, is they're, one of the first out to say, let's take another piece of that hedge fund puzzle and hand it to the masses and see what happens. And that's exactly what Lime was founded on. How do we take that, trade execution technology and hand it to every other trader on the retail side? So I'm very excited to push that narrative forward personally. But I know it's a very probably unpopular opinion, and I hope none of my former coworkers, send me nastygrams after this. But I really feel like, that accountability is something that everyone needs. And I think we've been suffering at the hands of people that are, gatekeeping this technology. So I'm excited to make sure that everyone has access and can truly democratize what the industry should be.
Yeah, and I mean that mission is core to kind of what our mission here at Benzinga is as well, in terms of what we were founded to try to kind of democratize news and financial data that had long been held specifically for hedge fund and institutional investors, and to try to kind of bring that to the masses and every day. I guess, Shayla, for I guess the good news for maybe the more traditional wealth advisors right now, even on the precipice of all this AI stuff coming in, is that I don't know. I would venture to say a lot of them probably, at least in terms of like bigger clients, a lot of them are probably older, and there might be a lot of older people right now who are still very would be very scared of saying, okay, yeah, instead of having my guy Steve at Morgan Stanley managing my money, I'm going to go put it all into an AI thing. But I think for people like my age and younger going forward, you're 100% correct that job might not exist in today's role, at least in like 20, 30 years. But for right now, there probably are a lot of, older people that, I don't know, a lot of people that have money that might not be ready to make that leap, but a lot probably are, especially if people are more tech forward and in Silicon Valley and whatnot.
Yeah, it's the trust but verify, right? I mean, you have the opportunity, especially when you're managing larger pension funds, or Schwab just released that study on like Generation I, and this just an attitudinal kind of behaviors towards money. I think it's ushering in, even if it's not full autonomy, this trust but verify. I really do know that you know how to manage my money, but I do want to have a little bit more peace of mind, especially with things like all of the craziness with Enron and the crash in 2008. I feel like people just want to back up, even if they don't want to be hands-on. They want to analyze things for themselves and have a greater confidence index in their advisory business. So I think if nothing else, it's calling people to be a little bit more honest and hide a little bit less. Not saying that everyone's doing, malintent, but I think especially for these generations in the middle that are caught right between those brackets you're talking about, that there is an opportunity for people to have more hands-on tools to verify what they're being told. So I think that can only push the industry to be more truly competitive and to be a little bit more altruistic. I mean, we don't want to lose anyone's money, and we don't want anyone to be swindled. So no more Ponzi schemes. We're trying to bring more clarity. And I think Gain Trade is using AI for good. And that's something that, we have to keep an eye on. I know there's been a lot of, Elon commentary on like, we have to watch that. And what I love about Gain Trade is it's really like using it for good. It's an AI buzz topic that's not about stealing your identity or stealing art from, individual contributors. It's really about how do we use AI for good. And that's something that I think if all of us band together and are passionate about, I think that'll end up being really powerful for the industry.
Yeah, that's awesome. And it seems like, you found a good one in Gain Trade in terms of a company that's, like doing some cool things technologically, and then also in line with that mission that you guys have at Lime. Well, Dimitri, Chaley, it was great to have you guys on. I'm going to go ahead and share this link in the chat to the contest for any of our viewers out there like me that might want to sign up and enter for that chance to win $3,000. And again, learn a new trading strategy while you're doing it. Dimitri, guys, please come on again if you guys have new contests, new things going on that you guys want to discuss. This has been awesome.
Great.
Thank you, Aaron. Thank you so much.
Thanks, guys.
Of course. I know you guys got up. I know you guys got up a little early for this because y'all are more. We're on East Coast time, so it's a little bit afternoon here, but we all got up early in the day, so I appreciate it.
Power of coffee. Gotta love it.
Always needed.
Thanks for having us.
Of course. All right, guys, that was Dimitri and Chaley from Gain Trade and Lime FinTech. I'm going to go ahead, like I said, and drop that link to the contest in the chat. Make sure to sign up. I will. If you want to compete against me, I'm going to sign up and it's game on if you guys sign up. I'm going to try to kick your ass, and I will be, sharing my updates and what's going on there here on the show because I'm gunning for that 3K. I need a new set of golf clubs, and that will help get me there. All right, guys, it is 12:08. We've got a few minutes left in the show. I still see Nick Brown hanging out backstage, so that was good and scary, AB. What's so scary, Easy Mike? Don't be scared. Don't be scared. It's just some AI. It's not coming for you yet. I'm just kidding. There's nothing to be. Come on, guys. I mean, we just had this conversation with Ryan. Why? What that says more about us as humans than I think it does anything else. That there's this new incredible technology up, and people are worried about it taking over the world. That's the human. That's what humans would do with this power. They're just because the computer does. That's what's gonna happen. Losing jobs. Yeah, I mean. You know what my AI my job in the world where AI comes for every single job. I want to be a professional caddy. ChatGPT can't carry someone's clubs. I want to be a professional caddy. That will be my backup if AI comes for all of our jobs. I'm gonna try to make it on the tour as a caddy. All right, I'm gonna bring Nick back on for Nick. I'm gonna give you 2 minutes. Give me a rundown of what else you got on your radar. Nick Brown, welcome back.
As Easy Mike says, scary. It was fun. It was funny. It was a good interview, but it's scary. I don't think AI is going to come for our jobs. They're not as good as us. AI is not as good as us, AB.
Well, I told you, I've got a good backup one. I'm going to be professional caddy if it does. All right, Nick, you got any other big headlines for us before we tune off for the day?
Yeah, I was going to say, watch Uber. They reported earnings this morning, better than expected earnings, top and bottom line, raising the guidance for top and bottom line. It was their first profitable quarter coming in. So that's always a good for a company. CEO basically said company plans to be profitable every quarter going forward. That's always good news. Just looking at the big calls of the day, trying to see what stands out. Nothing too big, really. The only thing I can think of is Ford. Morgan Stanley reiterates Ford is overweight. They said they're standing by its overweight rating, but that the company needs an electric vehicle strategy change soon. And believe it or not, we did get Ford news this morning. If you could throw up a chart of Ford, that stock was reacting earlier to the news that they're going to be restarting their F-150 Lightning production. That says demand jumped 6-fold after July price cuts. So this EV strategy and this strategy of trying to produce more cars is really going to be very interesting to see how that compares to GM, to Tesla. And other than that, we have Apple, Amazon earnings. And I am going to end with this, AB, because it's August. And I did share this with the live trading community. I only have about 5 to 6 more shows left with you before I head back to school. So time is winding down. It is going to be bittersweet once I say goodbye to you. And of course, I'll still be with Benzinga, but part-time. And where it is going to be hard for me to come back on the show. But any days that I have off of school, I surely will try to come back, try and provide more insight. But it's been a wonderful summer with you as always. This isn't goodbye forever. We still have 6 more shows left. I still have 6 more shows left with you. But I am grateful for everybody in the chat, for you, for all the support, for me coming in, letting me bring you the news, bring you earnings. and for Benzinga giving me this opportunity. But as I said, it's not goodbye. It's just taking a little break from full-time, going back to school. I'm a senior this year, so college is coming up. But this is not goodbye, and I'm excited for what this year's going to bring.
Well, Nick, yeah, I mean, I don't want to start thinking about that yet because, like you said, we've got at least a couple more weeks left. But we'll make sure to do something special for you before you go back to school. But thanks, man, as always, for hopping on the shows. You've been killing it per usual. So, Nick, I think with that, let's go ahead and wrap up the show. We've run a little long today, but we'll be back on Thursday. Like you said, we'll do some Apple, Amazon previews, and excited for it.
Yes, got a jobs report Friday. Summer is not winding down, let alone this week. So we have a lot to get through this week. Remember, earnings, listen to the conference calls. They provide great insight. And always, we'll be back Thursday.
Beautiful. All right, Nick, as always, appreciate you coming on. Enjoy the rest of your Tuesday. We'll chat.
Thanks, AB.
All righty, y'all. It is 13 afternoon here on the East Coast. Well, we're not on the East Coast, but East Coast time. With that, we're going to go ahead and tune off Benzinga Live for today. Make sure to stay tuned for our wonderful coverage for the rest of the day. Make sure to follow Benzinga on TikTok, Instagram, Twitter, you name it. We're there. Till we see you on Thursday. Peace and love, y'all. Happy trading.